Okay, so welcome back. We're continuing our series talking about different loan types, and Cotton, Baldwin from Motto Masters, is still here with us. In the previous episode, we spoke about conventional loans and all the criteria and what that looks like. And now we're going to transition to FHA loans. So, why would a buyer go with an FHA loan versus a conventional loan?
So there's a few different reasons. FHA allows for lower credit score buyers to obtain the loan. FHA can go down to 550 credit score if you put down 10%. Anything 580 or higher, you can put down 3.5%. Which helps people, if you've owned a home in the past 3 years and can't qualify for the 3% down conventional, you can put down the 3.5% with FHA. Another reason is the debt to income ratio on FHA loans. They allow a little bit more wiggle room for that than conventional does.
Okay. What are the majority of loans that we do in our area, would you say? Would you say their FHA loans tend to be the majority of loans that we do in our market?
We do have a lot of FHA loans. I would kind of say conventional FHA are almost the same ratio. Maybe a little bit more FHA. Of course, a lot of VA as well, since we're right here at Fort Gordon.
But, yes. Yeah. Well, that's a perfect transition. So let's go ahead and talk about VA loans. Okay. So what is a VA loan? To people that don't know what a VA loan is.
A VA loan is for military borrowers. So if anyone that was in the military prior or currently in the military, they can get a VA loan. And it is a 100%, no down payment loan for the military.
Okay. But even in this month, well, what do the interest rates look like on VA loans? Do they tend to be a little bit more advantageous or not so much?
Right now, they are lower than FHA and conventional. So, of course, it does, go off of credit score and some other factors, but they are right now a little bit lower. So, in the mid fours right now.
Okay. And the advantage really to going with a VA loan for active military or vets really is that 100% that they can finance the total amount of the purchase price.
Yes.
Right?
So they have 100%, don't have to come up with the down payment costs. They just need to cover the closing cost if, the seller isn't giving anything towards that. The only thing that they're really going to have to, notice is the funding fee. And the funding fee depends on if you've used the, VA loan before. The first use is 2.3% of the purchase price. And then that gets rolled into the loan amount if you want it to. So you can pay for it at closing.
Okay, so they can be out of pocket on the funding fee, or they can roll it into the loan and finance it, and it becomes part of their monthly mortgage payment.
Yeah.
Yeah?
Yep. And then if you've used the VA loan before, so it would be subsequent use, it is going to be 3.6% funding fee.
Okay.
But then if you put down 5% or more, it drops to 1.65%.
Wow.
So you can actually put down 5% and get a lower funding fee.
Okay. So it's these kind of details and all of the different criteria that matter when you're speaking with your lender and matter in your final loan approval, which is so crucial for you to be able to move forward with a purchase. So any questions that you have about VA or FHA, by all means reach out to Cotton and ask her all the questions you need to. So next up, what should we talk about? USDA?
Yeah, we can.
All right, we're going to talk about USDA loans in the next one.